welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, we have a big earnings week for the index, not to mention it's outperforming the other major averages this afternoon.
Yeah, we're up about 1% today, 1.8% over the last 5 days. So that's outperforming all the major benchmarks in the U.S. Month to date, we're up over 7%. Again, the top performer as well. So year to date, we're right on par with the S&P 500 after outperforming it last year by 30 percentage points. So, we had been concerned about the last, the 4 weeks in September. There was a bit of a toppy-ish kind of price pattern that was kind of building underway, and turned out to be a continuation pattern, as we had been highlighting as was a possibility. So overall, the index is looking great. It's breaking out to new 52-week highs today.
Right.
As you said, we have plenty to look forward to with earnings season right here upon us.
And it's so interesting, Brian, because when we were talking last week, we thought one of the catalysts where we could potentially see some volatility was hearing about supply chain issues, whether it's for the quarter or whether it's forward looking. And then you take a look at a lot of the stocks that have exposure to it, and for the most part, they're continuing to perform well. So it makes you wonder, okay, is this priced in? Does the market understand we're going to have some issues over the next 6 to 9 months, even possibly a year? And they're looking forward to what that rebound will look like. It really is quite remarkable how stocks have held up here.
Yeah, and the corporate earnings have been good, and I know there's supply chain issues, but there's been a lot of various concerns that have been underway in the marketplace. A lot of political risk, fiscal stimulus packages, whether or not they're going to get pushed through as well. So at the end of the day, price is king, and it's incorporating all these different risks, different types of investors. And when we see prices breaking out to new 52-week highs, and more importantly, the breadth is improving within the index, that's something that, is certainly to take notice of.
All right, well, Brian, on that note, let's pull up your Bloomberg here. Let's take a look at some of the levels that you're watching, because as you said, breaking through those 52-week highs and improving breadth, I mean, from a technician's perspective, that's pretty strong.
Right, so here's a chart of the percentage of members within the index making 52-week highs, and you can see in the last week, we kind of hit a level here that we've seen, once in the last 6 months, and that was during an uptrend, a pretty strong uptrend that we saw late spring into the summer. And right now, so we've hit that again this past week. What our recent concern in September was, when we had these 4 down weeks, there's a possibility of this head and shoulders topping pattern. We noted that during uptrends, these patterns can develop, and they can often turn out to be continuation patterns where this support line, the neckline, does hold. That's the case here. And so as we were breaking out this week, and today especially, we're seeing now, all right, well, where can we go? This range is about 1,240 points. So if we add that distance to the top of the range, which is 15,700, that projects to about 17,000 minimum measured move to the upside, which is about 7% from here. So that's the minimum measured move that I think that many technicians would be targeting right now for this move in the NDX, so long as it can hold a breakout level. We noted the breadth is looking very good on the weekly time frame. This was, I think, what is the most important thing that kept us, with a constructive bias, is that this uptrend that we've really been seeing since September of last year held 3 or 4 weeks ago right here, right on this line that we've had in place for quite some time. So on this intermediate term time frame, the uptrend was never broken, and so for that reason, we never got too cautious, too bearish. We know technology makes up 50% of the index, and communication services is another 20. One sector that I speak less about and probably should focus more on is consumer discretionary. And we can see this over the last 2 weeks has made a pretty significant breakout as well. This is 20% of the Nasdaq-100. And when we look at discretionary as a ratio over the staple sector, it's a common ratio that technicians look to try and get a feel for, the types of stocks that are moving higher amongst all the 11 sectors, and an animal spirits kind of feel. We can see this is breaking out as well, right, over the last week or so from this range that it had been in for many months. And so that there also supports the risk on kind of sentiment that's been we're now seeing kind of take place underway. We've had some recent volatility in certain groups. This is the chart of the 2-year Treasury yield. So you can see in the last 4 weeks, it's had a phenomenal move higher. It's gone from about 20 basis points to over 50, 55 basis points just today and yesterday. And so I think this is more of an indicator that market is expecting the Fed is going to need to be more aggressive with its expectations for rate hikes in the future. And I think the market is pricing in, quicker and probably, quicker in time for when that's going to start, and the number of rate hikes as well, faster than what the Fed is communicating. So, but the broader equity market seems to be digesting that.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.